stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip or spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird and the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we let it off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door.
Become the next level leader you aspire to be with a doctorate from Franklin University. Choose from programs in business, healthcare, and education.
Okay, do you want to take over? I have let a couple people in. I don't know if they're getting kicked back out or not.
Yeah, I've let several people in too that have been kicked and someone else just dropped.
Yeah, let's go ahead and start for the recording purposes.
Yeah, okay.
Take over screen sharing.
I am. All right. And all right.
All right, I'm going to start. Hi, everyone. Welcome. Happy Wednesday. Welcome to our Wednesday night Multifamily Freedom Chasers Debt Financing Zoom call. My name is Shelly Miles. I'm an author, a commercial mortgage broker, and a co-founder of our brokerage company, Adventure Commercial Capital. What our company does is connect real estate investors like yourself to lenders. And we are here for you. Let's move to the next slide. Today's agenda, we're going to talk about our community ecosystem. We're going to do some introductions. We're going to introduce who we are, and then we're going to give you the opportunity to introduce yourself and to tell us a little bit about yourself. You're going to hear the current debt market update, and then we are going to talk about the main topic, which is what are the requirements to secure a commercial real estate? What are the requirements to secure commercial real estate financing? And then we'll have a Q&A at the end. Do you want to move to the next slide?
Sure.
So I'm going to talk about our community systems. Our community ecosystem that's on your screen right now. It's a community like no other. We have 4 calls that we do. We have the activation call, the asset management call, the financing call, and the deal sourcing and underwriting call. So the activation call and the asset management calls are alternating on Mondays. And the first Monday you will get the activation call with Trevor. You'll get activated for the week with a celebrity guest. We have some pretty cool high-level people in there. Last week we had Chris and Maricela. I don't know if you guys know who they are. Most do in the multi-family space because they're everywhere. We sometimes have Vina Jetty. We have, can you think of anybody off the top?
Michael Blanc.
Michael Blanc. We have some pretty good people in there, and we actually have the recordings on the Multifamily Freedom Chasers YouTube channel that you can go check those out as well. And then, so you get activated with them for the week, and then you have the next Monday, you'll have the asset management with BB and Iffy. Most of you already know BB and Iffy. When you close a deal, what do you do next, right? The real work begins. You're going to learn the fundamentals, explore real life scenarios, challenges, and solutions for multifamily operations. Then you have us on Wednesday. We do the multifamily financing. You'll get live updates on the current debt market, and you'll learn what it takes to find and qualify for debt to take down a big multifamily deal. Then on the alternating Wednesday, you have deal sourcing and underwriting with Ed and Kevin. You'll learn how to engage with brokers, source deals, and underwrite them quickly and efficiently with Ed and Kevin. And we are all experienced, and we're all in the multifamily space. We're all actively doing multifamily stuff, buying deals, working on deals, closing deals. We closed it was a small deal, but we closed a small deal last weekend, and it took us 3 weeks from application to closing, which was pretty awesome. Yeah. And yeah, so next slide. So I'm going to share, so you can find us on the YouTube page, the Multifamily Freedom Chasers YouTube channel. You can find us on Spotify, Facebook, Instagram, and the WhatsApp group, which I have the link for that in the other page. If you want to go ahead and put that, skip to the other page so they can scan this QR code so you can get on our WhatsApp page. And I'm also going to put if you're not part of the Facebook group yet, here is the link for the Facebook group, and you can join us there. You'll get all the updates for every event I just talked about. We only do it twice a week, and it's alternating Mondays and Wednesdays with all 4 of us. And I'll let you take it away.
All right. Sounds good. Welcome everybody to the Freedom Chasers Financing Zoom. I'm Jerry Miles. This is me and Shelly here, the Miles, with our 2 boys. JJ just graduated high school, and Jordy is just now starting high school. And I will say, I'll go ahead and tell you all, next week there is a big real estate event happening with Legends Equity Group in Las Vegas, and JJ, our son, has been asked to be a speaker at the real estate event, 3-day event. He's going to be speaking for about 20-25 minutes, I think. So we're proud of him getting invited to speak out there. He is a YouTuber and an entrepreneur and doing well in that space. And Alex Lovely, that is holding the event, asked JJ to come and speak, and so I'll be going out with him and spending 2 days at the event and hearing JJ speak. So if anybody's in the Vegas area, come to the event and reach out to us. We can get you links and things to be able to go to the event. But
yeah, it's called the Legend Impact Experience.
Okay, cool. But we are the founders of Adventure Commercial Capital. We lend on commercial real estate nationwide. We got started in this business because we're investors ourselves. We've been investing for about 10 years and have dealt with brokers before. We did not like the experiences we were having with brokers, and we, decided to start this business because we saw a need for somebody that could, come into the business, walk alongside of the investors, treat them fairly, and just be a service to people. And I told Shelly probably 6 or 7 years ago, hey, I think we could do this business and treat people fairly and honestly and do a better job than these guys we're dealing with now. And so we started our company, probably going on 5 years now, I guess, and it coming up to 5 years we've been in this business. But anyway, so that's who we are and what we do. If anybody would like to introduce themselves, tell us what market you're in, what kind of business you're in, what do you do in the real estate field? If you work a full-time job in real estate, let us know that.
Yeah, go ahead and raise your hand, and we'll get you up here. Why don't you go ahead and scroll back to the WhatsApp
Okay.
thing so people can scan it while we're waiting.
Okay.
But don't be shy, guys. Tell us a little bit about you and your market so people
Yeah.
can get to know you. This is being recorded, so it'll be out there for everybody to see. So
But if everybody's shy, I will move on. So we'll get started with the current debt market update. And I did not fix this. This is the Fed today finally cut rates, but they cut rates about a month ago now, I guess. The Fed rate is now, 4.75% to 5%. A lot of our long-term rates that we offer to people are based on the treasuries. So the 10-year and the 5-year treasury really haven't moved a whole lot since the Fed cut their rates. It has gone up. It went up about 20 basis points. The last 2 days has gone down about 5 basis points. Not much movement. But, it I think that we're going to have some downward movement here before the election. Just makes sense that it would, but we'll see. The treasury rates determine what we pay on long-term debt. When we look at short-term debt, there's a lot of different factors there. Depending on who the short-term lender is and where they get their money from, it will depend on what institution or whatever is kind of setting the rates, whether it's SOFR, whether it's the Bank of America rate, or whatever. So I've got 2 rate sheets here that are updated, I believe today, right? These were updated today. This is the Freddie Mac small balance. Freddie Mac small balance goes, 2 million to 7.5 million. Occasionally we can get down below the 2 million if it's a nice deal. When you get over the 7.5 million, they go to what they call the standard rates. Those will be a little bit lower than these, 20 to 30 basis points lower than these rates. Are the conventional rates. This is Freddie. Here's Fannie. And Fannie goes up to 6 million, and then you get their conventional rates at 6 million. Anything above 6 million, and there's really no cap. Everything's got a cap eventually, but so I've been talking, the past year and a half or 2 years we've been doing these calls. I've been talking about, we've been in a stagnant market that whole time, because of the rates. And I've gone through different calls and showed how the rates have affected the valuations of properties. When you go from a 3% rate to a 6 to 7% rate, it's pretty severe cuts in the valuation of properties because of the debt service coverage ratio that you got to maintain when you're getting your debt and things. So it's been a stagnant market because of that. People that own don't want to sell, because most of them, unless they've owned the property for more than 10 years and haven't refied, things like that, they're losing money when they sell. There's still some occasions out there where you might be somebody that has owned the property for 10, 20, 30 years, selling. Their cost basis is so low they can still afford to sell the property. But in most cases, properties are just sitting on the market, or they're selling with assumable debt. Those types of things. So there are going to be a lot more deals coming to the market, as we see at the bottom of the screen here. $2.7 trillion in debt maturing by 2027. $500 billion this year, $500 billion next year. As these loans come due, that fixed period of the loan comes to an end. These people are going to be forced to sell unless they can get extensions and things like that. There's people over the last 2 or 3 years that are on extensions now for going on 2 years, some of them, and they're going to be forced to sell. And the bank's going to get tired of extending these things, and they're going to say, hey, we need to get our money back. We need to lend this money out again. We need to recycle things. So because of all the extensions and things like that that have happened, I think that these numbers here, what's maturing in 24, what's maturing in 25, are going to be larger, because I don't think these aren't accounting for all the ones that should have sold over the last 2 years and haven't. So just something to keep in mind as you're looking at deals. So getting into our main topic of requirements to secure commercial real estate financing. We're going to talk about smaller properties first. What are the requirements when we're looking? I'm talking small deals, like a lot of people that are just getting started are looking at smaller deals. Some people have been doing it years are looking at smaller deals just because that's their game. But I'm talking about deals, $1.5 million and less. Small commercial, multifamily, 1 to 4 units. And I see you, Andrea. How you doing? Good to see you. These deals are not looked at in the same way that the bigger deals are. These deals that these smaller deals like this, they're going to be based a lot on your own personal situation, your own personal credit, your own, your own personal liquidity. In a lot of cases, there's not really a net worth requirement, generally speaking, on these smaller deals, because they're entry level. The banks, the lenders, you got to start somewhere. And so, if a guy's got a $500,000 net worth, or 300,000, and he's trying to buy a $700,000 property, the bank's generally not going to hold him back, because they say, oh, well, your net worth isn't the same as the loan amount of the property. They're going to let them get that first deal in so they can start building. So that's what these smaller deals are for, whether it's a fix and flip, single family rental, 1 to 4, or even some markets, you can find 10 and 12 units for $1 million or less. So and these entry level deals, a big thing with a lot of these entry level deals is they like to see skin in the game. If you're buying and you're a syndicator, you're looking to just bring other people in, and you're wanting to sign on the debt and everything yourself, a lot of times these smaller deals, they're going to hold you back at 70%, loan to value. If you bring an investor in, let's say you bring an investor in, and he's covering the down payment and closing costs, the lender might come back and say, well, this guy either needs to sign on the debt, or you need to put 10% of your own money in it. A lot of time, just because they want to see that person that's running the deal has got some skin in the game. So stabilized deals, when we're looking at larger stabilized deals, anywhere from $1.5 million, all the way up. Lenders look at location. When they're looking at deals, they look at location, and when they're looking at location, they're not just looking at the street. Is it a pretty street? Is there a Starbucks there? Is there this? Is there that? They're looking at the location as far as crime rates. They're going to look at jobs. I've seen people get excited about, oh, well, this is next to a military base, things like that. The lenders don't like military bases, generally speaking, because, if we had a big deployment and that whole unit, left, your tenant base is gone. And the military is notorious for moving this unit somewhere else, or to another base or whatever, and then your tenant base is gone again. So, they like to see a lot of jobs, a lot of job opportunities, different employers. When you get to those single market, single employer towns, lenders don't like those. So when they're looking at location, those are the types of things they're looking at. So if you're looking, you see a good deal. I get a lot of people that call me, oh, I've got this awesome deal, and and then they tell me the town, and I've never heard of the town. It's somewhere in the middle of Kansas, or, we're in northern Kentucky, close to Cincinnati, or, they might be in southern Kentucky or wherever. And I'm like, who's the employers there? Where do the people work, and things like that. And it's, if you have a Dollar General down the street and most of your tenants work at Dollar General and Walmart, that's not really a strong job market, for a lender to look at. So usually there's a reason why properties are priced low. Um, Stabilized deals, cash flow. They're going to look at the DSCR requirements, property condition. The condition, I have it down on the list because it's not as important as location. You can't change location, you can change a condition. Now, these two are always important on any deal. Borrower with experience when we're looking at stabilized bigger deals, and the borrower's net worth is going to come into play when we're looking at larger deals as well. So anything, it's not a set guideline because every bank's a little different, but I say you get over $1 million to $2 million, the banks are going to stop looking at, oh, well, this is a startup deal, we can get this guy rolling with this one. Or, where they're going to say, we're not going to give you a $2 million loan because you don't have a $2 million net worth. So they want to see equal to or greater than on your net worth when you're qualifying for debt, when you're looking at bigger stuff. And if you watch the gurus, Grant Cardone and a bunch of different ones, oh, you don't need a credit score, this and that. Well, if you want to sign on the debt, they're going to check your credit. For Freddie and Fannie, it's 680 or better. Freddie and Fannie, they like to claim that they're fluid. They will, move the goal sticks around. So if you have a high net worth, you have all the other things you need, and your credit is a little lower because, just let's face it, credit, the way credit works sometimes isn't always nice. And you don't have, late payments or a bankruptcy, things like that. They'll look at you, if there's other reasons why your score's a little lower. So, qualifying for bridge loans or construction rehab loans, the lenders are going to look at exit strategy. So anytime we're looking at a short-term loan, we're going to be, how are you getting out of this loan? If we're looking at construction, can you complete this project? Do you have the reserve? Do you have money in reserves? Do you have experience doing any kind of rehab? You're getting ready to do 100 units, rehabbing 100 units. Have you ever rehabbed a unit? These types of things, you need to prove that you have done larger scale projects. So borrow with a track record. These types of things are what they're going to look at. So if you're looking at, well, I'm going to rehab this property, we're going to then turn around and we're going to refinance it into a long-term loan. Well, now we're going to look at, have you done a project like this? And then also, when you get to that point, are you going to be able to qualify for the long-term loan? Or do you have someone on your team can qualify for the long-term loan? Or, even if you're looking at, oh, well, we're going to fix this up and we're going to sell it, so I don't need to qualify for the long-term loan. What happens if the market turns around and the only option is to refi? They're going to look at that anyway. They're going to make sure that you can qualify, that the property they think could be sold. They're going to look at it from every angle. It's been a while that, a lot of lenders were holding people back at 65% loan to value. We're only going to offer 65% on this bridge loan. Oh, we're only going to offer 65% on this construction loan. And, as an investor, as a lending broker, you'd look at that. Oh man, can't you give them a little more? We want to get this deal done. Well, if you look at how the rates have kicked up, 3 years ago now, I guess, rates kicked up, and we've had valuations in a lot of cases have been cut by 35%. I see a lot of deals out there where, oh, well, they owe 10 million on this deal, and all we can lend them now is, let's say 7 million. And so their sale price now is what they owe on the property, where before they bought it for 14 or 15 million. And so, the lenders are smart. If a lender, and if there's a property that they're having trouble finding funding for, um, look at that property and say, hey, if someone's having trouble right now finding funding to buy this deal and they're having trouble selling it because there's no funding for it, you need to really look and say, hey, are the things I'm planning to do to this property going to change that? Is it going to allow this property to be financed by somebody else? Because if that's not the case, that's going to be a problem that you have when you go to sell the property or exit the property. So that happens a lot with people that buy on seller financing. Most people aren't going to sell with seller financing unless that they're having trouble selling because people can't get financing for the property. So they're offering seller financing because that's their only exit. And you got to look at the property and say, hey, if I'm buying this with seller financing, am I able to do something to this property to make it look different, to do this different, to make it now able to be financed? If not, then your only exit strategy is going to be, well, you got to find somebody with cash, or you're going to have to seller finance when you go to exit. So just things to think about. And that's what the lenders are going to be doing when they're looking at the deal. They're going to say, hey, if I end up with this deal, am I going to be able to sell the deal? If I end up with this deal, am I going to be able to sell it for what I have into it? Or are these people going to be able to sell the property? Or is it going to be financeable? Are they able to lease it up once they get the rehab done? All those things are playing into it. So, and then, what is required personally when you're looking at financing commercial real estate? The basics to qualify personally: experience. I see your hand.
So there's a question in the chat from Andrea. She said, when you say borrower with track record, does that mean that the GP team as a whole or one person need to be experienced, or the KP needs to be the track record?
It could be any of those. It could be, well, you've got 3 people that have all done quite a few different deals, or 4 people that all qualify. You're trying to get a $10 million loan, and you got one with a $5 million net worth and 3 others with a couple million each. You could all put it together and have the net worth requirement. And let's say each of you have done some rehab, and you all have a track record, a track record that you can account for. Hey, I bought this deal and sold it. I've flipped 100 homes, or I've done, several 12 units. Now I'm ready to do a 50, or whatever. And if you put people together that all have experience, that's always best. Like, unless you just have one rock star that has been doing deals for years and they've done, hundreds of units at a time and things like that. So it could go either way. So experience is experience. So, I mean, it is better if you have that one person that has done probably more than 4 people altogether. It's probably better. But you can work it out either way. So hope that helps. So basics, to qualify personally, net worth is, they're going to look at all of your assets minus your liabilities. That gives you your net worth, and they're going to look at that against the loan amount. So if you're trying to get a $10 million loan, you need to have a net worth of 10 million or better. If you're talking to KPs and you have somebody that has done this before and they want to KP a deal or be the sponsor on a deal, they're going to be able to tell you, oh, I can qualify for this much, or I can qualify for that much. They're going to tell you, I can sign on loans up to 16 million or whatever it is. And like I said about the credit before, credit is important. If you want to, now, if you just want to be the person that puts the deals together, you have a KP, you have all these things, you never want to do that part. Don't worry about your credit. Don't worry about your net worth. Don't worry about any of it because you're going to have KPs and sponsors all the time. But if you want to be the person, I think most people that are buying real estate eventually want to get to that point where they're able to sign the loan. They're the one that is, I mean, when you're a person signing a loan, you're calling the shots generally. So, and everybody wants to be there, I think. So, and any questions? It's only 8:33, so we got a lot of time for questions if anybody has questions. And I'm going to continue moving through slides. Anybody has anything they want us to look at as far as deals? These are the things I need to be able to get quotes out. T12 and rent roll. An OM is awesome to have. I have people all the time. I just had somebody 2 days ago send me a T12 and rent roll, and it didn't have an address on it or nothing. And I'm looking at it like, I don't even know where this property is located, and nothing about it. I don't know how many. I mean, I could count the units on the rent roll, but I don't know anything about the property or nothing. All I have is a T12 and rent roll. And it's really nice to have a location because that a lot of times location will affect the rates and terms. So a summary of what you plan to do with the property is helpful. They have it listed for 10 million. Are you planning to offer 10? Are you planning to come in, 7 or 8 million? And as we get to the point where we have an LOI accepted, we're ready to move forward with the lender, we will always need an SREO or a schedule of real estate owned, and your sponsor will have that, or your KP, a personal financial statement for the person that will be signing on the debt or group of people that will be signing. These are all things that we will need.
I just want to say, if anybody has any questions, just go ahead and raise your digital hand, or if you don't want to speak, you can put it in the chat and one of us will read it. Thanks.
Yep. So needed for a quote on a small deal, single family, 1 to 4 units. These are the things I need. Address. If it's a purchase, I need the purchase price. If a refi, purchase price, date purchase, current value. Monthly rent, taxes and insurance cost, borrower's credit score. I see your raised hand.
Yeah, somebody wants to know, what is operating memorandum?
So that is a sales pitch that the selling broker is going to put together. It's an offering, an investment offering that they put out. They're going to have pictures of the property. They're going to have addresses. They're going to show you where it's at on a map, try to make it look really nice and pretty. They're going to, put a pro forma in there. They're going to show you some of the current finances, and then they're going to show you what they expect or what they're trying to sell you that will be the finances a year from now, all the way up to 5 years from now, generally. It's a sales pitch, but I like to get it just because I like to see, the offering memorandum has an address. And, the other docs like the T12s and rent rolls and things usually don't have addresses and things on them. I need an address and stuff. It helps a lot to be able to quote a deal. So.
Thanks.
So monthly rent, taxes and insurance cost, and borrower's credit score. So there's that pesky credit score again. This week's verse, Colossians 3:23-24. Whatever you do, work at it with all your heart as you're working for the Lord, not for human masters, since you know you will receive an inheritance from the Lord as a reward. So always work like you're working for Him. Our next Zoom will be October 30th, 8 p.m. The lender's perspective on the underwriting process. I'll be going through, I'll probably just take a couple deals that I've had sent to me through a week or two, the last previous week or two, and we'll look at them on here. And I will show you what I look like, what I look at and things when I'm sending quotes, and how we look at deals, multifamily deals. So here is my contact info, mine and Shelly's email addresses. That's my cell phone number, and then you can always take a picture of the QR code or scan the QR code. That's my hi hello card. And everybody join the calls. All these people that are on here are actively working full time in commercial real estate, whether buying deals, doing deals. Iffy and BB have bought a couple deals here in the last year. Ed and Kevin have bought several deals in the last year. One really nice deal in Destin, Florida, 120 units in Destin. We are always working on real estate deals. Ed and Kevin are commercial brokers, so they're working even when they're not on their properties. They're working on deals. We're working on deals every day for other people. So join the calls, get educated. And I will tell you that, it says this is a community like no other. The education and things that are provided on these calls are better than some of the paid mentorships that we've been through. I will tell you, we paid $40,000 for a mentorship for a year, and the people that were teaching the classes and things were paid teachers. They weren't in real estate. They weren't real estate investors. We saw that in the first workshop we went to. After they had good people, when they were selling us a program, after we paid the money and was at the first workshop, we learned they sent a guy out here to teach us that has never done a deal before himself. We just picked up on that because we see a lot of deals. We do a lot of, work on a lot of deals. And so this group here, I think it's a beautiful group, no cost, and it's, really high level education. So, and we are done early. So if anybody's got any questions, feel free to ask, but we will go ahead and end early. All right, Eric, go ahead, man.
Yeah, so thank you guys for doing this. It's very valuable.
Yeah.
You're right. I've spent a lot of money on education as well too. You pick up things as you go wherever you go. But I'm really glad that you're speaking of this tonight. I'm looking at two deals right now, smaller deals in the Boise area, and one's an 8-unit deal, and then there's another it's not even with a broker. It's with a real estate listing agent. It's 3 duplexes, so it's like 6 units sold as a kind of as a group package. So I don't really have a question around this. I'm just saying I'm grateful to be able to look at it with these deals in my mind. Here you talk about the smaller deals and the requirements and things.
Yeah.
Um,
And if you don't, I mean, if you want to quote on any of those, always feel free to reach out before you put an offer in or whatever. I can get a quote together for you and help you out in that respect. So,
I appreciate that. I'm still building my own financial structure, so to speak, and so
okay.
far, my game plan is to bring investors in, use their
Okay.
capital, and
Yeah.
structure it in that way.
Yeah. And on these
And I'm
smaller
still
ones,
very new, so
yeah,
good.
on the smaller ones, it's the fewer people, if you have one or two that can bring in the money, the fewer hands in, the better, because there's really not enough room on a smaller deal like that for a lot of people. So if you're needing a down payment of 300,000, it'd probably be better to bring one person in with that 300, and hey, I'll do the work, you bring the money, I'll make sure we get it closed, all those types of things. All you do is bring the money, and then we could be 50-50 partners or whatever, because if you bring in, let's say you bring in 6 people at 50,000 each or something, um, that's just a lot more reporting and a lot more work you're going to have to do on the back end. And then when you syndicate in that way, you're not equal partners with them. You're now syndicating and things, and you're not going to keep as much yourself, and they're not each going to keep as much either, so.
So I appreciate that.
Yeah. So I mean, that's just my take on it. I would say, hey, find somebody that can come in just as a partner,
Just keep it small.
Yeah. And
Yeah.
then as you get a few deals under your belt and you start looking at bigger stuff, then you've got that track record there. But you don't want to buy 6 units and bring in 3 or 4 different investors, because if you buy 6 units, you're probably going to be stuck managing them yourself, and there's just not enough money to go around and things like that, once it's all said and done. So
Okay. I'm starting to kind of let the dust settle and see things for what they are, which is the reason I'm grateful for what you're saying. It's very logical, because
yeah,
I've approached this business as, just like you said, you don't need no money, no credit, but it it's a different strategy when you approach it from that perspective. But that's how I've learned it so far.
yeah,
So I'm kind of relearning as I go. But I'm a wholesaler as well, so I look at a lot of smaller single family distressed properties, but I also look at the 150 unit things as well too.
yeah,
So um, it's good to have a full perspective and see every strategy involved for
yeah.
each.
And if you're a wholesaler, you probably know buyers.
Yeah,
And so if you have buyers that have cash and things, I mean, that would be your first target to say, hey, I've got 6 units here, 3 duplexes. I can get it under contract. Or would you be interested in partnering with me on it?
yeah,
So instead of saying, hey, I've got this here, I want to make a fee on it, say, hey, will you be my partner on the deal? I'll do all the work.
yeah. The
So
6 units actually do need some rehab. Like one of them could be rented out right now. The others kind of run down a little bit.
yeah.
The other two are kind of run down. So it would be a flip.
Okay.
But I understand what you're saying. Like when that's going, structure it with tenants and get the ball rolling, the actual business part of it going.
Yeah. Yeah. Yeah.
Okay.
Cool.
I appreciate talking that out. That's good.
Yeah,
Thank you.
for sure.
And while
Mm.
you wrap up, am I muted? No.
Yeah, you're good.
You guys go ahead and put your information in the chat like Andrea did and connect with each other and build your team, or even connect with each other to ask questions. Andrea is very she knows a lot about the multifamily space, so you can connect with her as well.
Yeah. Yeah.
And sorry about that earlier. I guess I was unmuted while I was calling somebody. That was my phone that was ringing. Just trying to get a hold of our 15-year-old. He's out and about this fall evening at a pumpkin patch, and I was trying to get a hold of him. He finally called me back, thank God. If you're a parent, you know what that's like. So, what else you got?
No, that's it. And Andrea, I sent you an email back. If you can hear me, I sent you an email back on that deal you sent me on Queen City Avenue.
Yeah, I'm going to respond back to that because I'm analyzing the market to see if it's something that lenders are comfortable with.
Yeah,
We've
I
expanded
think
markets. So now it's Kentucky and Indianapolis. So I'm noticing parts of Cincinnati that are very unfavorable to lenders. So I'm trying to make sure that I don't choose a market that's not favorable.
so. When you look at a map of Cincinnati, I would say stay out of the west side of Cincinnati.
Everybody tells me that freeway left of that, don't mess with it.
Yeah, and I know the area really well. My grandparents lived there my whole life, and I've got aunts and uncles. My mom grew up there, but it's my grandfather used to sit on his porch as he was retired, and I guess on his deathbed almost, but he'd be listening to the police scanner and he'd say, "Oh, they're getting closer every day."
No, I think that's what's great about these these Zoom calls is that we all try to connect with one another, form these connections. And if you're investing in an area that we're located in, I'm in like Ventura County, California. But I live in LA my whole life. So if anybody has questions about Los Angeles, feel free to reach out to me too. Just like with Jerry, Jerry and Shelly, they live in the northern part of Kentucky, but they have so much knowledge about everything that's within like a 3-hour radius because they're like constantly vacationing every weekend. Like they're the ultimate bucket list family. So did you sell your camper? What was it? A van?
No, it just sits in our driveway now.
Oh man.
Shelly takes care of her mom, and we don't really get to use it as much because she's not doing well. But it's I was like, I'll sell it, and then when she's not taking care of her anymore, then we'll get another one. But if it sits there until then, whatever. So
yeah, well, I appreciate you guys so much. Thank you.
Yeah, for sure, anytime. All right, well, everybody have a great evening.
Yeah, and I will leave you with some music. Thank you guys for joining us. I shared the Facebook link again in the chat. Go ahead and click that if you haven't joined that yet and be a part of our community. Let me share some music with you. I think it played last week, so hopefully it plays this week.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. Getting money, never losing hope. But I'm broke, but now I'm living adding digits, comma zeros and some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested dough and I let it grow.
Benjamins, I got a pocket full. Rich income and your taxes low. Spend it right and then the best more. And if you don't believe me, ask my doctor down.
What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet.
I buy apartments, I send checks.
Yo, billionaire went undercover, help y'all discover who did it best.
Just buy